Hello, and welcome to another edition of the AI Cash Grain podcast. I'm Satish Nandapurkar, Director of Data Driven Strategies at Quantum Hedging, and today is September 13th. As always, I will start with our legal disclaimer, which is that every now and then we do recommend futures and options trades on the podcast, and the risk of loss in trading those futures and options could be substantial, and each investor, trader, and or producer must consider whether this is a suitable investment or trade for them. Now let's get to the podcast today. First, I'll go to Cy Monley, who will talk, as always, about the trader view, the traditional trader view, as to what's going on in corn and soybeans. We're kind of at that time of the year where we've already had that big drop seasonally, and now we kind of go sideways a little bit until the market figures out where it wants to go next. Corn was up 7 cents, closed at 4.13 and a quarter. Soybeans was up, was up 1 penny, closing at 10.006 and a quarter. So, Cy will talk a little bit about what the market's looking for there. Then we'll go to Kevin, and similarly, Kevin will show that our models are looking sideways for the next couple of months to the end of the cash grain program. So both corn and soybeans looking sideways, maybe a tiny bit up, but with kind of a wide interval around that. It could go down, could go up. Not huge probabilities, not a lot of conviction either way. And as a result, our models are, just like last week, telling us to stay pat, stay 70% sold. In both cases, we're matching our benchmark. We're ahead of the benchmark. We're beating the corn benchmark by over 10 cents. We're beating the beans benchmark by over 5 cents. So we're winning in both cases. The model's kind of telling us to hold with these positions for this week, just not enough data and conviction to decide. We've got an end of month coming up here in a couple of weeks that we will definitely be having some recommendations at that point. So with that, let me turn it over to Cy. Cy, do you think these markets are going to go either way anytime soon?
Thanks, Satish. I think this week's pretty easy. The big thing here is we got harvest coming the next couple of weeks. We're on a nice little bulge, historically speaking. Last half Sep, when you're coming into harvest weekends here, usually market starts to tend to sag, and we're on a nice bubble for both corn and beans, kind of bumped up the higher end of the ranges. The idea going forward is the market should set back as we absorb this large crop. Now, moving forward, it's all about demand. So I think the interesting part will be into October. If we start to see these rivers replenish, if we can get some of our demand back, maybe then you can get sort of a little rally in October per our models. But as of right now, it's really cut and dry. Harvest is coming. I price some of your grain up here. If you haven't sold anything or priced futures, that's kind of what the traders are thinking too. So it feels like we're bumping in the top end of the range. Kevin, our models really show anything different?
Hey, thanks, Cy. This week we saw the corn model kind of confirm what happened this week, which is, a little bit of an increase, 7-cent gain on the week, which, given the year that it's been, we'll take any sort of rallies we can get, even if they're relatively small. And that's kind of what our model has been suggesting, that as we get to the balance of, the harvest season, that, the model keeps saying we'll kind of lean higher. So, pulling us out of those $3 marks, $3.80, $3.90 that we were in, a month ago, and now we're kind of looking at kind of the 420, 430 mark is kind of where we might end up by October. And so, I think our model continues to kind of pick up on kind of the late season heat that has been pretty prevalent and continues to be prevalent even in the forecast as we go into the next 10 days. Still quite a bit of heat in the forecast. Dryness as well. So some of that, later crop, especially in the northern parts of the country, could see some yield trim off of it. And so our forecast for the end of the month, sitting for September at 418, that's up from last week. And the end of October forecast, last week we were at 430, down a little bit this week at 425. So again, nothing like big rallies to change the kind of overall profitability situation for farmers. Just, if anything, maybe a little bit more pain because of moving away from any potential insurance payout. So that's going to be challenging for some farmers who haven't taken advantage of moving some positions around. Again, our managed acres program helps you kind of manage towards that, those moves in insurance. So on soybeans, we do see a little bit of a flip this week. This week, we're seeing our soybean model kind of confirm the corn model, which is slightly higher. Last week, our model for soybeans was a little bit lower. And so we are seeing our soybean model start to tilt more to the upside as well. The end of October forecast looks intriguing, kind of mid $10 range. We'll see if we can get to that. But certainly this week, there's some things that it was picking up on that says a little more strength is in the forecast as we get into October. So that's kind of where we're at. Satish, what are you seeing on your side?
Thanks, Kevin. And as I mentioned before, the recommendations this week are to hold in both corn and soybeans. And I always talk about where our recommendations come from. They take our forecast, they run it through simulation models and decide what gives us the best chance of outperforming our benchmarks by about 8 to 12 cents on the corn side and about 10 to 15 cents on the bean side. The benchmark is a predetermined strategy of selling an increasing percentage of expected bushels each month end from January through October. We've talked about that. When we are bearish, we get oversold. When we are bullish, we get undersold. That's our recommendations relative to the benchmark. That's how we beat the benchmark. When we're neutral or we don't have conviction, we stay in line with the benchmark. Up until now, with respect to corn, what's happened was we got quite bearish at the end of May. It was a great call. We took off that bearish view slowly as the market fell, and as a result, we're now even. Last time, our recommendation was to sell 10% on at the end of August. It got us even with the corn benchmark at 70%. But as you can see, we're a good 13 cents ahead of the benchmark. If we stay even, we'll end up about 9.5 cents better when we average in this last 30% by the end of the year. So corn made some good calls right there at the end of May, and we are where we are, and we're going to stay even though, and this week's recommendation is to hold. With respect to soybeans, our models did pick up some bearishness at the end of May. We got a little bit oversold, not a lot oversold. Unfortunately, we took that off a little early. The models weren't pointing to continued bearishness. The models are probabilistic. They don't give you the exact answer, but we did get a little oversold. So we're 7 cents ahead of the benchmark because we did get bearish at the right time. We just got neutral a little too early. We sold 15% last at the end of August. We are in line with the model. We're about 7 cents ahead of the model, which means if we stay neutral and in line with the model, we'll be about 4.8 cents better by the time we average in this last 30%. So a beat in both cases, a really nice beat in corn, a little bit of a beat in beans. So that's where we are. So with that, let me just do a quick recap of this week. As I mentioned, corn was up 7 cents. Bean was up a penny. Cy came and talked a little bit about, in his view, we're really heading towards seasonal lows before we have any kind of a rally going forward. The models, though, Kevin's looking at sideways activities to the end of this month, but maybe a little bit higher after the month ends into October, but very little. When you look at these confidence intervals, they're quite wide. It's really 50-50 which way corn and soybeans go at this point. There's not a lot of data, not a lot of tells in that data as to which way we're going to go. And as a result, both models are basically saying, hey, not enough information here. Just stay in line with the benchmarks. You're ahead of the game. You're winning, kind of in basketball parlance, maybe go into a four corners type of strategy here until more data comes in and you see opportunities to do something. So we've got a hold in corn, hold in soybeans. Models are fairly neutral. So with that, just wanted to close off this episode, say thank you for being a subscriber. Thank you for listening. We'll be back next week again in 2 weeks. Will definitely be a recommendation because that's the end of the month. So make sure to listen closely to that 2-week one. I suspect next week will be similar to this week unless there's some drastic data that comes out. But thanks again.